Hey guys, my name is Colin. This is Colin Talks Crypto. This video, I'm going to talk about Global M2 as it relates to Bitcoin and how I specifically will avoid being misguided by a Global M2 line that perhaps in the future could keep going up while Bitcoin goes down. Remember, there are non-correlated periods. And in 2021, that exact scenario happened where Global M2 kept going up. And if you kept holding, you would have lost money because Bitcoin tanked sharply and it missed the top. Global M2 missed the top. Well, I have a solution to that. And this is something you've not heard anyone else talk about. Everyone else is just giving their worship and praise to the Global M2 line. And I think it's great. But I'm not a one-trick pony. I have different metrics and I have a solution to help you and help me avoid being deceived by a Global M2 line that maybe misses the Bitcoin price top. It's come to my attention that the Global M2 money supply versus BTC chart correlation has pretty much gone viral. I mean, it is everywhere. It is being talked about everywhere on the internet right now. I knew it was being talked about in a lot of places, but it just suddenly hit me today, like how out of control this really is. And that happened when I saw the video on this guy's channel with 2.6 million subs. This guy, Andre Geek. I had never heard of him. I guess I don't spend much time on YouTube, honestly. But he was showing my chart and he was just going over it and talking about it. And I mean, 2.6 million subscribers. That's a lot of subscribers. And before that, I've seen it on channels like Altcoin Daily. He has 1.8 million followers on X and more on YouTube. Crypto Manran, the Rand Nooner Show. Into the Cryptoverse with Benjamin Cohen, Invest Answers, etc., etc. And quick shout out to RUPL, who really is as far as I'm aware, the creator of this correlation or the first person that really brought it to mainstream awareness. I think that he did the first step, and then when I started covering it, it just exploded. And now everyone's talking about it, but I did not invent this correlation, and I just want to make that clear. Now, when I shared this, the fact that I was just kind of like realizing how like viral and out of control this has gone, a couple of people responded, and I got Benjamin Cohen responding, and he did a video on kind of a, in my opinion, kind of an odd take. He thinks that a negative offset is correct, and I explained why I don't agree in this post here, and I'll read some of that to you in a bit. But then also, I was actually pleasantly surprised to see that RUPL himself responded to my post. And he said that we built it, meaning Global M2 to Bitcoin correlation, I think, back in the summer of 2024 based on our long-term correlation chart we've been using since 2020. And so I just thanked him and validated him for being the legend of the, the sort of the grandfather of the creation of this indicator. So that takes us to the point of this video, which is a lot of people are talking about this, a freaking lot of people. And I've seen one of the most common comments in my videos and posts on X, and I understand now where they're coming from. People saying something like, well, everybody is talking about this, so it couldn't possibly come true, right? Like the market basically makes the most number of participants wrong. So if the most number of participants in the market are relying on the Global M2 correlation to Bitcoin, then it would seem to be logical that those would be the people who would get it wrong. Furthermore, to add to that, and part of Benjamin Cohen's point he was making in his video, and that other people have brought up as well, is that the correlation of the Global M2 money supply to Bitcoin is not as strong in the past. I really focus on the last 3 years as when it's the strongest predictive correlation. But if you go back further, there's still a loose correlation, broadly speaking, but it's not as tight knit and it's definitely not as predictive for each ebb and flow of the cycle. And that is true. But there's various explanations for why it could be getting more tight-knit more recently, such as the advent of ETFs. However, this is a global asset. So I go back and forth on that argument because we are dealing with a global asset and the ETFs are really just in the United States and maybe one or two other countries, but not all the countries have access to those ETFs. And the money is a global phenomenon. And if you've ever isolated just the US money supply chart, it really is not very helpful in terms of predicting the Bitcoin price. So to use the argument that the ETFs in America are somehow causing the tighter correlation, I think is sort of disproven by the fact that the price moves are really predicted more so by every other country. And sure, United States is part of that. But you can remove the US money supply and have just as helpful of a chart. Let's put it that way. So I understand the points for and against this, but I do want to address this point of if everybody's looking at this, how can this be useful, right? Surely when we must all be wrong, we can't all be right. That would not make sense. And there's a logic to that. And so I think the best way for me to start answering this is to actually read the reply that I gave to Benjamin Cohen as a part of his video. And I'll read the parts that apply to this point. You can read the whole thing if you want. I'll let you decide if you want to read the entire post. It's rather long here. I'm not going to read all of it because a lot of it pertains to his argument that he thinks that it's possible that a negative offset could be useful. And I don't agree. I just don't agree. And I explain why. But anyways, I'm going to just cover the part that relates to everybody knowing about this indicator and how could it possibly still work, okay? And specifically also the periods where the correlation is seemingly broken. For example, a lot of people will correctly point to the 2021 top and say, well, hey, if we had just followed the global M2 money supply, we would have been wrong because the global M2 kept going up even after the double top in 2021 for Bitcoin. And so if you had been relying on global M2, you would have kept holding and then you would have been wrecked because global M2 kept going up while Bitcoin went down sharply. And I have an answer to that. And so this is my answer. So first of all, I agree that the correlation of global M2 to Bitcoin is likely to break. By definition, there will be 20% non-correlated periods. That could very well include the absolute top, just like last cycle. I think it would be naive to discount the possibility of it failing to call the final top, as too many people are expecting it, and it did fail last cycle. So I think we should consider that. However, the time when that non-correlative period happens is key. Global M2 can guide us correctly for a long time before it breaks. Basically, don't discount 80% of valuable, accurate correlation for the 20% non-correlated periods when it fails. The odds just don't support that logic. You know, if you have 80% of something working and you know that it's going to fail 20% of the time, do you toss out the entire metric? Well, I think any reasonable person would say no. You would hang on to it and kind of extract the 80% of the value and know that 20% of the time it's going to be wrong. That's a very high success rate for an indicator. Furthermore, though, because we don't want to get caught off guard for the next bull run top, we don't want to be watching global M2 keep climbing higher. And it could do this. And then Bitcoin makes like a top or a double top or whatever formation it makes for its ultimate price peak. And then it heads down. But then what if M2 keeps going up? That would screw everybody over, right? And this is my solution. Diversification of metrics. Period. That is the solution. And I will explain. The chance of M2 correlation breaking near the cycle top is why I would not rely on the global M2 correlation alone as a top indicator. This is why I will be watching the 9 Bitcoin metrics of CBBI, which is my personal Bitcoin index. Visit it at cbbi.info, among other metrics. Things like the Coinbase app rank in the iOS App Store, just to name one, or even the Google search term rank for the term Bitcoin, things like that. I have a kind of a basket of indicators that I look at. But one of the key ones is CBBI because it's really a basket in itself. It's an aggregate of 9 other metrics. And I will go into this specifically at the end of the video a little more deeply than I normally do. And I'll just show you why I'm going to be using this as sort of my ultimate price top indicator. So TLDR is I'm going to use global M2 to guide me toward where the top might be. And then when other indicators start heating up and get overheated, that's when I will take profits, regardless if M2 keeps predicting more gains ahead. Just like in 2021, right? We don't want to get caught with our pants down, holding all our assets, watching M2 climb while Bitcoin's tanking, because maybe that clue was present on another index or another indicator or another metric. And if we had simply opened our eyes to a diversification of metrics, we could have seen that coming. And that's exactly my plan. So I'm saying this right now as sort of a preemptive defense against what I consider to be an inevitable outcome when eventually the M2 does decouple. Like we haven't had a decorrelation for about 30 plus days right now. You could even say 60 days. The last 60 days, it's been tightly correlated just per the chart, right? Just per the math of it. Let me pull it up real quick here. See, for the last 30 days, we have a 91% correlation. And for the last 60 days, we have an 86% correlation. That's very, very high. So that's from where we are right now, $103,000. And that's 60 days back. So that would put us approximately somewhere over here. All this chart has been heavily, highly correlated. So it's kind of reasonable to expect that perhaps coming up in the near future, we may have some heavily non-correlated periods, perhaps 20% of the time. And it's not always going to be like 5 minutes off, 30 minutes on, or something like that. It could be, for example, like this, 60 days of correlation. Well, what's 20% non-correlation of 60 days? Let's see. We take 60 times 0.2. So we could have 12 days in a row, basically 2 weeks of non-correlation. And it would basically make sense for the last 60 days of correlation that we've had, you see? But what if Bitcoin continues to follow tightly for another 60 more days? Well, then we'll have 120 days. Let's say the Bitcoin price is up here. It's followed tightly for a total of 120 days. What does that mean as far as like what we could expect from the non-correlated period? Well, we could be due for 24 days of non-correlation at that point. That's almost a month of non-correlation. We could get a month where it just deviates completely. Or maybe that's the price top, right? Like maybe Bitcoin puts in its price top, M2 keeps going up here, but actually right here was the price top. I don't know, I'm just making this up, right? That could be, that would be a similar scenario to back in 2021. So I'm just painting the picture of how it's almost like we could be saving up some days of non-correlation that have yet to rear their head. But how do we combat defensively against being surprised by that decorrelation? Well, we'll go back to the post and diversification of metrics. Global M2 is very much a macro indicator. And the surgical precision, which is already very difficult, required to time a price top, is better done by a diversification of other metrics. So I just want to be very clear because I can see people rearing their heads when in the future we do hit a 2 to 4 week period of decoupling of the M2 chart. People, some of the more toxic people or people who maybe don't have an understanding of this will come out of the woodwork, or someone like Benjamin Cohen will say, oh, haha, it was actually a negative offset this whole time. See, I told you. And I think that's false. And I explained why. You can read this whole post. But I'm saying this ahead of time because I expect that to happen. I expect people to, sentiment turns on a dime on social media. People get very bullish and very bearish very quickly. I've not noticed a lot of patience. I think patient investors is a rare quality on X and on social media. Only the veterans have it. I find that myself, I'm finally starting to kind of get comfortable with this idea of being extremely patient for price moves. And it really has paid off, but it's taken me 10 years to even get a grasp of that, even slightly. And I take a look at some of these veterans like Peter Brandt or Bob Lucas or some of these guys who've been around for decades and decades and decades, and they have a really good grasp, in my opinion, of patience, this quality of patience. Or someone like Warren Buffett, the probably epitome of patience. Like he can hold on to cash for a year and he doesn't even sweat it. And then he'll buy in when the market bottoms and everyone's panic selling. Like he is probably the role model of patience. And I think he would probably agree, like patience is one of the hardest skill sets for an investor to have. It's really difficult. And especially when you're younger, like I can say it now, I'm starting to get a little more old, a little older, a little middle-aged. I'm not 20 years old anymore. I'm not 30. Like I've got some experience under my belt, but I think I still have a ways to go. I'm learning just as you guys are, but I'm learning to respect what some of these veterans say. And the veterans are not wrong. Like patience is probably one of the hardest skill sets to have. And sometimes doing nothing is the right move. That's the thing. Like it's so easy. I've been there a million times myself, caught up wanting to do a trade because either I'm infatuated with the asset class or I love reading about it and I'm over immersed in it. And then I'm trading it too much. And I saw something on X where some guy talked about shorting the market. And then I want to get fancy and I want to short the market too because I think I'm fancy. And then I lose some money. and I learn a lesson, but then I do it again. And it takes a lot of lessons to learn these skills of patience. So I do agree. I think that patience is a very difficult skill for an investor. I think that it's a very important skill for an investor. I think it's probably one of the most important skills, up there with bet size and timing and all of these other things. Of course, you have to enter the market at the right time. You have to exit the market at the right time. You have to use the right bet size, and you have to be patient enough to wait for the right opportunity to both buy and sell. This is sort of a freestyle video, so pardon the length of it. I'm not going to really shorten this down. I'm going to make this as long as it needs to be to get my point across. Okay, so I'm saying this now before decoupling and non-correlated periods happen, because there'll be people who come out of the woodwork, especially newbies, especially non-experienced people, as I was myself. I'd say I'm in the middle somewhere now. Like, I'm moderately experienced. I've had my experience with loss. I've had my experience with gains. I'm not an expert, but I'm not a newbie. I'd say I'm in the middle, if I'm being honest. And I'm trying to share those lessons that I've learned with you guys. So when those newbies come out of the woodwork and say, ha ha ha, the offset was wrong, you were wrong for this reason, it's actually a negative this, or it's broken entirely, it never works, or it failed to call a top in 2021, that's why it's failing again, and you were wrong, and this whole time you've misled everybody, those people will absolutely rear their heads, their ugly heads. And I'm here to say that I already saw this coming, okay? Not only did I see this coming, the non-correlation and the toxic individuals, but I already have a solution to it. And I'm saying that now before it happens so that I can show you how on top of this I am. And I can cut this part of the video out and reshare it just to back myself up in the future when people like that do rear their heads. So I want to be very clear. I'm not saying that this predictive M2 correlation in Bitcoin will last forever. I'm just saying that it exists now and has existed for several years. Several years is a long time. So if we can get just another several months of usefulness out of it, then great. And we can use other metrics to guide us along the way. That's the key. Diversification of metrics. Do not rely on one metric. Do not put all our eggs in the basket, the M2 global money supply basket. I think that's how you get led astray. And I think a lot of people will get led astray because everyone's copying and pasting this content, and they're not paying attention to the fact of this last thing, this last piece of the puzzle that I'm sharing with you right now, which is diversification of metrics. They're going to be led astray chasing the M2 higher when Bitcoin has topped, because they're going to miss the top. And I sure hope that I get it close this time with something like CBBI. I've planned for this moment, okay? Let's put it that way. And I could be wrong, but I think that at least I have a better chance than I did last cycle or the cycle before with the experience under my belt. And I think I have a better chance than some of these guys who only look at the global M2 chart and put all their eggs in that one basket. So diversification of metrics is key. When the M2 correlation finally does break, it's inevitable. I'm telling you right now, it's going to break and it's inevitable. Whether it's just that 20% or whether it feels like a longer period, like back in 2021. Maybe it's a 2-month long stretch of non-correlation, which is enough time for the entire market to collapse, right? Like that could happen. So when M2 correlation finally does break, it doesn't suddenly mean that the offset should have been negative or that it was wrong entirely or that it never works, okay? It just means that the correlation never existed 100% of the time in the first place, which is what I've been saying for months now, but I'm gonna hit this point home with a hammer, and I'm gonna show you my diversification of metrics so that you can get an idea of what I'm talking about and how I'm going to approach this to hopefully avoid being sideswept by an M2 that keeps going up while the market goes down. All right, we already know that that could happen and we should expect it. Thus, Global M2 should not be used without other metrics in order to verify where we are in the cycle. These are just my 2 cents after spending a lot of time with this subject. And I hope that this is the value that I bring to the space. Like, a lot of people copy and paste the chart. A lot of people pretend like it's their own content without maybe really knowing what they're even talking about. It's really easy to share an image that someone else creates or to quickly recreate your image and then share it as your own content, which is what I see a lot of these social media personalities doing. Some of them have maybe a greater understanding or a lesser understanding. But an example was when the India M2 was showing a huge spike and everyone ran with it, and I didn't because I put a little more thought into it. Those people were just kind of the robots, like showing the data without thinking about it or understanding how it could possibly be wrong. And I was the one who said, I'm going to hold off on that. I'm going to remove India because I think there's possibly an error in the data. And that turned out to be correct. So I'm not trying to overly pat myself in the back, but I'm trying to paint the picture that there's a lot of copy pasters out there, a lot of people who have enormous social media followings, millions of subscribers in some cases, and don't really necessarily have the depth of understanding that I think that by now I've demonstrated that I've put into this. So let's take a look at the diversification of the metrics. Okay, so let's say that Bitcoin keeps climbing for another 2 months. That's awesome. But how do we prevent ourselves from being screwed over by a Bitcoin top when the M2 keeps going up? So my main answer is CBBI, Colin Talks Crypto Bitcoin Bull Run Index. I made this a couple years ago with a guy from Poland, a brilliant developer named Puell Multiple. And I know I pronounce his name wrong because I'm not Polish, but he doesn't mind. And together we put together this site. And he basically made it so that it automated the vision I had already had for measuring metrics. And it takes 9 historically accurate Bitcoin metrics and it composites them into a single score. It aggregates them and spits out a single number, which is this confidence score is what we call it, 76 in this case. And this is the quote unquote confidence that we are at the peak, right? Right now it's at 76 out of a theoretical 100. Generally speaking, historically speaking, it has reached in the high 90s or 100%, something like that. And full disclosure, every bull run, we fine tune this and we recalibrate it, I should say, so that the peaks and the valleys accurately reflect the charts at that time. And there's a reason for that, and I can get into it. It might be a little bit too much for this video, but maybe I'll touch upon it at the end, depending on how long this goes. Okay, so here's the 9 different metrics. We have the Pi Cycle Top Indicator. If you've been around in Bitcoin for any amount of time, these should be very familiar names to you. The RUPL NUPL chart, show me your NUPLs. This is the net unrealized profit and loss chart. The RHODL Ratio, the Puell Multiple, the 2-year moving average, the Bitcoin Trolololo trend line, the MVRV Z-Score, the reserve risk, and the Woobull Top Cap versus CVDD. This is a custom metric that I sort of put together from some of Willy Woo's, is that his name? Willy Wong's? I forget his name, honestly. But he's a brilliant guy, and I made a custom indicator out of his stuff. And I'll show you that at the end so we can get his name right. No disrespect meant there. I just honestly forgot the name. Okay, so this chart down here shows us the Bitcoin price line right here, color-coded by the CBBI score, but the CBBI score can be viewed by itself as this blue line, and you can see it's a oscillator. It's an oscillating indicator because we want to know when we're at the Bitcoin price top and when we're at the Bitcoin price bottom. That's really all we care about. That's the point of this. This is a cycle top and cycle bottom indicator. That's its intended purpose. Whether it gets it right is up to these 9 different metrics and the algorithm that we have put in place to analyze it. But we've put the Bitcoin price back on there, and you can see that the CBBI confidence score was 100 when the Bitcoin price was about $16,000, close to the top here, in the 2017 bull run peak. And I'll let you go here and you can play with this chart yourself. But so far this cycle, the highest score we've seen is about 82, 83. It hasn't broken that. It's sort of a double top there at 83. I think we're going to see higher. I really do, based on M2, based on technical analysis of the Bitcoin price chart itself, based on these 9 metrics, et cetera. I do think we're going to see higher. To be fair, though, the last cycle we did see an 82 or 83 as the absolute top before we recalibrated it for this cycle. So anything is possible, and that's always the case with any chart and any asset class. So that almost goes without saying. But this is the CBBI historical chart. And so right now we have a score of 76, as you can see right there, which corresponds to 76 up here. So in my opinion, when this breaks 90, that's a time to look really closely at taking profits. 95 to 100 is for sure. For me, I'm speaking for myself. I'm not giving financial advice. I will be taking profits, absolutely. Because for this score to say 95, it means that this aggregate of 9 different metrics averages to 95 or higher, or 90 or higher. For these 9 metrics to pull that off, they have to all be quite saying the same thing, quite overheated, and in unison all together. So That's why I'm using this aggregate method, because I think the chances of 9 metrics all being wrong, and they're all saying, 90% plus overheated, is pretty low. I think it's pretty low that could be wrong. And that's what the entire logic is on this particular Bitcoin price index. So let's take a brief look at some of these individual scores. Okay, we'll go sequentially throughout these. First, the Pi cycle top indicator. So basically, this is the Pi cycle top indicator. It's 2 moving average lines. And historically, every time those moving average lines have crossed, has indicated the price top. This is one of the most accurate Bitcoin metrics that I've seen for price tops and price bottoms. For price bottoms, I actually measure the distance between the red and the yellow lines here. And when it's the widest possible distance is where we take the bottom. It's really an interesting metric. And if we zoom in a little bit here so you can see it a little closer, we can see that, for example, right here, it's not exactly perfect, but it's dang close. And like I said, it's the closest thing I've actually seen in Bitcoin. Where this orange line and this red line cross, that is basically the price top in 2021 in April. The technical top, the actual $109,000 price top, it did not call that, but this was a strange double top. And I think really the technical top was this first top. So let's move over and see the right part of this chart. And you can see that we are not anywhere close. These 2 lines are not even close to touching. In fact, they're getting further apart, which indicates to me, since we haven't had them touch yet this cycle, that the top is not yet in. And we need to see something like this where the lines converge and then they touch, or they get close to touching. Because as I've observed, the proximity of these 2 lines seems to be getting further and further from touching each cycle. So far, it has touched every cycle. You can see here they cross this cycle. They don't even quite cross this cycle. They just touched. I think it's possible they'll just get close to touching this cycle, but that's fine. It will still result in a 98 or a 96% score on the CBBI score, and that's fine because that's what we're looking for. We're looking for that overheated state. Okay, so this is the Pi cycle top indicator. It shows me that we are nowhere near price top for Bitcoin because these lines have not converged, touched, or even come close. Let's look at the next one of 9 different charts that the CBBI has. This is the net unrealized profit loss, aka NUPL chart. And shout out to one of my fans out there. He loves it when I say NUPL, okay? Because I sort of made a thing about that in the past. Show me your NUPLs. But I digress. So this chart here, really what I do on most of these charts is I'll draw an upper and lower regression line, which basically means, like, if we take away the Bitcoin price here, this is the blue line is the NUPL line. And I'll draw a line through the tops of this chart. You can see it slopes downward through all these blue tops, and it slopes upward through the bottom here. And we'll draw a regression line, is what it's called. And then we'll get the distance between those 2 lines and determine on a percent how far is the current state of the NUPL between the top and the bottom of the regression line. And that's what gives us the 88% right here. It's the distance, so we're close to the top of this regression line, but we're not quite at where it would be. And I guess I should show you what I mean, because it's a little hard to visualize that without me showing you. This is sort of some behind the scenes logic of the CBBI engine. And here is the chart I just showed you. This blue line is that RUPL NUPL chart line. Let me zoom in a little bit here, right here. This is how our engine interprets the data for CBBI. It takes the raw logarithmic chart data of all 9 different metrics, and then it throws a line through it right here, through the top and through the bottom. And this results in the data that you see on the chart. And you can see that this is where I'm talking about. This is 88% up from the green line to this orange line. This is how it gets the percent. If you were ever curious how CBBI works, 88% overheated, you see? And we use these regression lines to account for diminishing returns, because it seems like every Bitcoin cycle, and it's understandable, as adoption increases and there's more saturation globally of this asset class that is Bitcoin, more and more people have it, more and more money is into it, it's harder to move the markets, and the gains from cycle to cycle seem to decrease. And this linear regression line on the top and the bottom is used to account for that. Okay, so this is how I get the 88%. And this is the same for all these metrics. Like right here, we have the RHODL. We'll show you RHODL ratio on the next chart. And you can see it's right here. To me, it looks like it's, I don't know, 70% between these 2 lines, up from the green line. It's about 70%. What is it actually? If we scroll down here, 71%. See? So that's how you determine the percentage, if you were ever wondering. Okay, so this is the RHODL ratio chart that we just looked at. Let's remove the Bitcoin price. And so anytime that the Bitcoin price gets up into this red band, it's very overheated. Green band, it's underheated. Good buying opportunity when it's in the green band, good selling opportunity when it's in the red band. But we do it a step further and we draw a regression line through the peaks, because I don't trust that the author was necessarily correct about this red band. I think that, like for example, in this cycle, it was way, way, way off. And so I think that it makes more sense to account for diminishing returns, slap a regression line through the peaks and the valleys, and determine the percentage on the way up. So it's actually a 71%, even though it looks like it's only 50% of the way to this red. But based on the regression lines, we know that it's actually a little more overheated than it appears to be. The next chart in the CBBI array is the Puell Multiple. And the Puell Multiple is similar. We got an overheated region where you sell, underheated region where you buy. We slap a regression line through that, and we see that the Puell Multiple is it's reported at 100%. That's because how steeply the regression line has been dropping over time. And if we look at it right here, you can see how steep the line is. I'll zoom in on that a little more. This is the Puell Multiple linear regression line, and it's just accounting for perhaps inaccuracies in the Puell Multiple calling the price top. I'm sort of using this as one additional safeguard against the developers of each of these different metrics to make sure that I'm getting data that's usable. Like, we need data that tells us when the top is in. If the author is correct about his red and green boxes, then we shouldn't really see too much diminishing returns on this. This yellow line should make it just as far up into the red box every time and just as far down into the green box every time. If it's not, it's because the author's formula of this particular metric is failing to take into account the diminishing returns of the Bitcoin price movements or something of that nature. And so I'm taking their brilliant chart and I'm just safeguarding it. I'm slapping some guardrails on it and I'm saying, hey, you know what? This upper and lower regression line is here to protect us from perhaps the short-sightedness of the failure to account for diminishing returns. If it's too overheated for too much of the bull run cycle, it's possible we'll scrap this metric entirely because it's starting to fall short. You see, it's starting to not correctly indicate where the price tops could be. Actually, I'd say it's doing a good job this cycle, but last cycle it failed. Most metrics did fail last cycle, to be fair. So we will continue to watch this one. The next indicator is the 2-year moving average indicator. So you have this Bitcoin price line sandwiched between a red and a green moving average line. And if we remove the Bitcoin price line, you can see that it's really just two moving averages spaced apart evenly. It's actually really one moving average, and then the upper or the lower moving average is just spaced out to give us a channel to sandwich around the Bitcoin price. And let's zoom in a little bit on this one. And really, the simplicity of this metric is that I just take the distance between the green moving average line and the red moving average line. And well, we also draw a, it's hard to tell because this chart is already in log format, but we draw a linear regression line through the top and bottom of the Bitcoin price line and then determine how far it is between those lines in relation to the moving averages. I know it's a little complicated. I almost confused myself right there. Maybe this image will do a better job of describing it. So you see that here is the same chart we just looked at, but with our top and bottom indicator drawn right onto it. And we've regressed it so that it's actually touching the tops as opposed to floating wildly above them. And you can see that it's pretty close to being overheated in this particular case. And this is with some correction applied to it. Because if you take it by itself, it looks like we're actually quite far from it. And again, it's because this indicator is not taking into account the decreasing nature of the Bitcoin multiple through each different cycle. Okay, the next is the Bitcoin rainbow price chart. I don't know, do I need to go through all these with you? Maybe not. You get the idea. So like, for example, we draw a line through the tops, we draw a line through the bottoms, we determine, okay, how overheated or underheated is this relative to those upper and lower regression bands? And then on the CBBI chart, we see that we get a 59% on the Trolololo line. The MVRV Z-Score, we have the same kind of thing here with a lot of different lines. Let's remove some of the different lines we don't need to see. Really, we just want to see the MVRV score and the Z-Score. Actually, the Z-Score is what we're using, I think. And you can see that when it reaches into this red band, that's overheated and the green band is underheated. We slap a regression line on it, take the distance between the two lines and where we are currently, and we can determine the percentage that we are at, which is 78% between the two different trend lines, because it is a steep trend line through this, as you could tell from the other chart. Okay, and lastly, or no, second to lastly, we have the reserve risk chart, okay? So here's the Bitcoin price line in orange, and let's get rid of these other ones that are not the reserve risk price. And here we have the reserve risk price in relation to the Bitcoin price. And you can see that it sort of tops out when Bitcoin tops out, and it sort of bottoms out when Bitcoin bottoms out. So again, we took just the reserve risk data, we slapped a regression line through the tops and the bottoms to account for diminishing returns, and determined how far up the current reserve risk score is from those two regression lines. And that gives us our percent on the CBBI, which is 62%. Lastly, we have the Woobull Woo charts. Woonomic is his account name. Let me get his name right here, so I'm not disrespectful to this man. Willy Woo. Okay, that is his name, Willy Woo. Brilliant guy. Recommend you follow him. He's a master of indicators. So he's got all these different metrics on this chart. It's really confusing. What's going on? All we're interested in are the tops and the bottoms. Okay, so I'm leaving the top. Let's take out the market price. Let's take out this. Let's take out the balance price. Look at that. We got a channel. This is how I did this. We can throw the Bitcoin price back in there. And so basically, blue line's Bitcoin, pink line is what's called the CVDD floor, and the top line is his metric, a Bitcoin top metric, basically. Looks like it's a simple moving average. And basically, we take the Bitcoin price between these two lines and determine, with a regression line to account for diminishing returns, as usual, how far up this is on a percent. And we can see that it is 72% up from the bottom. And so we're 72% overheated. We have some ways to go. Okay, so that's what I wanted to share with you guys. This is CBBI. And if you're curious, you want to learn more, click on that video. I made this several years ago. It's probably out of date by now. Or this video at the bottom where Data Dash covered it in a brief summary. But that's how it works. I haven't done a video this in-depth on CBBI in probably 2 years. But this is going to become increasingly relevant when the global M2 money supply reaches its top, okay? Because, like I said, I'm not going to rely on one particular metric. If all I did was rely on this chart in front of you, I feel like we could be mistaken. We could be led astray where Bitcoin maybe begins its bear market and global M2 keeps going up. I think that's very possible. And I think that's where, if anyone's going to get tricked this cycle, that's probably where they're going to get tricked. They're going to get tricked thinking that M2 goes to the moon forever and Bitcoin's suddenly crashing, and they're going to just keep holding because M2 told them to keep holding. I'm not going to be one of those guys. I'm going to be watching the global M2 chart, but also watching CBBI. And when this starts getting overheated, basically, to me, this overrides the global M2 chart. So global M2 is fine until, for me, CBBI shows that we're overheated. Once this shows we're overheated, CBBI overrides that chart, especially if we have something like the Coinbase app rank at #1 in the App Store, which historically happens at Bitcoin price tops. If we have something like that, we have a CBBI at 95 or 90 or 93 or 98, whatever, that's where I don't give a crap what the global M2 line says. If it says we're going up for another 3 months, that's nice, but I'm going to take warning and take heed, because you know what? The other historically accurate metrics, 9 of them averaged together, are telling me otherwise. They're telling me, hey, you know what? M2's going up, but Bitcoin's overheated. Perhaps it's time to think about taking some profits. All right, guys, this video is long enough. Drop me a like, drop me a subscribe, share this video, and tell me what you think about my approach. I am not a one metric guy, okay? Like some of these other one trick ponies out there. I am looking at the big picture, and I'm trying to really cover my ass. Make sure I don't get shafted by something which is legitimate. It's a completely legitimate concern. Global M2 may deceive us at some point. 20% of the time, it's going to trick us. 20% of the time, it's not going to be correlated. By the way, I'm going to drop this correlation chart as a public indicator on TradingView so that you can click right here under indicators. You can type in Colin Talks Crypto, Global M2, or something like that, and you will see this chart. You'll see this M2 line, and you will see this correlation chart. And you're going to get this. This has been a highly requested feature. I'm going to release it to everybody, okay? Hope you enjoyed my video. Talk to you again soon. Follow me on X, Colin T Crypto, that's 1L. I make content there every day. If you're not following me on X, you are missing content. Have a great day.